So we'll do the accumulated fund first. So assets, clubhouse and course, the first one, that's an asset. All of this coming from the top. And that is 720,000. Then you've got equipment, which is 45,000. So make any mistakes in this, shout out at me. Okay, that's an asset. Bar stock 12.4 is an asset. Bar debtors is an asset. It's 860. Bar creditors is a liability. 5.3. Life membership's a liability. So all these just go straight in as you see them. 27,000. Levy reserve fund is a liability. Wages prepaid is a liability. So we paid someone in wages prepaid is an asset. So we paid them in advance, so they owe us the work or they owe us the money back. And subs due is an asset as well. So it's money that's owed to us. For 700. Alright, so that's everything in from the top. From the middle, we're looking for the bank balance, loan interest due, and any evidence that there's investments. Right, so the bank current account balance is over top left there, 3150. Okay, and that's an asset. Then I know there's going to be a loan and loan interest, so I'll go to those next. So the loan is 60,000, and we work out the interest. So if you look at the question, you repaid 64,500. So the interest paid in total is 4,500, and that was for 18 months. Okay, this year's one. So this year's expense was paid on the 30th of the 7th. So the expense is 7 months. So the due on the 1st of the 1st, which is the number we're looking to find here, is for 11 months. Okay, so take that 4,500, divide by 18, multiply by 7. Okay, we'll do the same here. That'll be the difference between the two, but 4,500 divided by 18, multiply by 11. Okay, and that's the 2750 we're looking for. Alright, so that's that. So 2750 is the loan interest due. Now down at the bottom we've got these levy due, which is an asset. And it's always the last one, so the one from last year. So the levy from last year, €100 on 11 members, is 1,100, and that's an asset. That just leaves me with the investments. And the investments in every question, sometimes they're given at the top. In this case, you have to work them out. So it tells us there's interest from 5% investments or 2,900, which means you have to have investments. Now at the bottom, so 5% is equal to this number here, 2,900. But there's investment income due at the end of the year of €600. So it's actually 2,900 plus 600. So 6% equals 3,500. All right? It's going to be our investment income. When we get to it, I'm just going to put that in case I forget it. 3,500. Okay? So 5% equals 3,500. We need to find 100%. So the investments then will be 3,500 divided by 5 multiplied by 100, which is 70,000. Okay, so investments are going to be 70,000, and I'm going to put that number in 70,000 into my balance sheet now, because if I was doing this question, that's what I would definitely forget. So over my fixed assets, I'm going to write investments. 70,000. And if you don't balance your question by a big number, there's a good chance you've left out the investments. That's what I always do wrong. Okay, that's everything in. I hope I have this right. We'll just add them up. And we'll add up the liabilities and we'll take them away. Alright, so your accumulated fund is 718,660. Now I don't have the ability to pause this, so I can either keep going at it or I can stop, but it's just going to make the video longer for you when you look back. You just have to, if there's any questions, you can ask them now and you can skip forward it obviously if you're watching later. Any questions on any of those? Do you need a minute, lads, to take that down?
I'll take a picture of it.
You can take a picture of it. Well, you don't have to. It's going to be saved. It's going to be saved up online as well. Will I keep going? All right, no questions in that. So just the tricky, I suppose, the thing to be aware of is that there is investments. That's the one that you can leave out, and then how you go about working that out. All right, so next jobs are bar trading accounts. So that's sales less cost of sales, or sales less cost of sales, which is made up of opening stock purchases and closing stock. All right. So sales figures are bar receipts. So 182,200. We're going to take away the debtors at the start of the year of 860 and add on the debtors at the end of the year of 920. So that's 182,260. Okay, opening stock is the one at the top, so 12,400. Purchases, same process. So we're going to start with this purchases figure here, 87,900. Going to take away the creditors at the start of the year, 5,300, and add on the creditors at the end of the year of 6,200. So that's 88,800. Okay, and then take away the closing stock at the bottom, 16,100. Alright, so our bar profit is our sales minus our cost of sales, 97,160. Alright, battery's a bit today, hold on. So, that done, that goes in your income. So that's gone into our income. What I said was 80. Sorry, I had the answer. 80 or 97,160. Okay. That should be all right. So at that point, I'm going to go back up to the top of the question and start working my way down. So I'm going to do the clubhouse first. So start that clubhouse up at the top. So clubhouse fixed asset. And that's 720. There's no mention of us building an extension or buying a clubhouse or anything like that. So 720 into our cost. The depreciation is 2%. So that's 14,400, which is an expense. Okay, I'm going to put that in my accumulated depreciation as well. And then obviously cost minus depreciation equals value. Alright, 705,600. Equipment that costs 45,000. However, there's a little bit of work to do on this one. So it's 45,000 as a starting figure, but we sold equipment that cost 3,500. and we bought equipment costing 32,000. Okay, so sold it cost 3.5, equipment costing 32. So you have to take the 3.5 away and add on the 32. So it's 45,000 minus 3.5 plus 32. Alright, it's 361,500. Then we're going to depreciate that by we're going to depreciate that by 20%. So 72.3. Okay. Did you? What have I made a mistake with? So equipment started off at 45,000. That's right, isn't it? Sorry, I have a wrong number there. My fault. Sorry, I put in an extra 0 there. Apologies. So 73.5. So 14.7. Thinking those numbers were a bit big, and I was waiting for someone to correct me, but he was too busy doubting himself. All right, at that point, just before I go any further, I'm going to put the loan interest from my earlier working. All right, so the loan interest is this year's one, so it's 1750. Again, that's an easy enough thing to forget when you do that working, so you should probably put it in straight away. So that's the clubhouse and course done, the equipment done, bar stock and bar debtors and bar creditors have been dealt with. So the next thing we see is life membership. So life membership goes, it's the same process as the equipment, goes in your finance buy though. So it's a long-term liability. So it starts off as 27,000, and then and it says we've three life memberships bring the total to 9, which means we've got 6 at the moment, doesn't it? So if we take that 27,000 and divide it by 6, multiply by 9, you get 40,500 as your life memberships. So they're 3,500 each, something like that. Right? Okay. So everyone gets that, yeah? The life membership, it's a sort of quick enough way to do it. They've been written off over 10 years, so 10 years life membership is 4050. And they get written off to income. So liabilities get written off to income. So the 4050 goes, it's not really written off, it's a movement to your income. So this year we're taking 4,050 from our life membership pot and putting it into our income. All right, so that's our life membership done. Next one is levy reserve fund. It's normally just double, but it's probably not in this case because of this from a mock. So it starts off as 40,000, and then you take your levy here 100 by another 400, so that's another 40,000. So it's 80,000. Okay, wages prepaid, they get added on to sundry expenses. Prepaid at the start of the year means it's to do with this year. So sundry, and we're going to add on that 500. So where's sundry? 176,500 plus 500 is 177. And substitute, that's my last sort of big working. So I'll do it here. Substitute, we take our starting figure for subs as 226,200. We're going to take away the due at the start of the year because it's to do with last year. That's minus 700. And then we're going to take away all the stuff at the bottom. So the life memberships. Which are should have. 13,500, so it's 3,500 each. 13,500. The second one, subs for next year, so subs prepaid. At the end of the year, we're going to take away that, minus 1,900. The levy is 40,000 for last year, or for this year, sorry. And then the levy for last year is 1,100. We take them all away. Okay. That's 169,000. Okay, so bank current account is in. Interest from 5% investments. I should have put that in at the start. I did 3,500. I've done that, so it's the 2,900 plus the 600. I've put the investments in as well. Really important you don't forget those investments. Bar receipts are in. Catering receipts will tie in with catering expenses. So we're going to get a catering loss in this question. So the expenses are bigger than the receipts. So it's 15,900 or 15,100 for the expenses, and we're going to take away the receipts of 12,900. That's 2,200 as a loss. Subs we've done. Annual sponsorship is income. Yeah, 24,000. And then this last one, the sale of equipment. Well, we've changed the equipment, but we sold equipment at a cost 3,500 and we sold it for 2,300. So we've made a loss on the sale of equipment. So anytime you sell an asset, you either make a profit or a loss on it. So loss on sale of equipment is 1,200. Okay, so that's everything from the left. From the right, bar purchases is done, sundry is done, the loan is done, loan interest is done, equipment is done, catering costs is done, prize bonds are a current asset. That's 3,800. Coaching expenses are going to be an expense. 4,800. Travel expenses are an expense. 12,000. And then the balance is your bank balance, so that's the current asset. 57,050. So we're down to the bottom. All of those are current assets or current liabilities if they haven't gone in. So bar stock is an asset. Next one, the equipment and clubhouse. We've done those depreciations. Bar debtors is an asset. And bar creditors is a liability. So that is 6,200. Always the stuff from the bottom, not the top. Life membership we've done. Subs prepaid as a liability. 19,000. Levy we've done 40,000, and this levy doesn't go in. It went in our accumulated fund. Investment interest due is a current asset of 600. And life membership we've done. So we've finished it. Hopefully it balances. So add up your income. Add up your expenditure. And we take them away. To get our excess income. And then we just put those two numbers in. So we call that if you don't call it excess income, you lose marks. So don't leave it blank. So we put in our two answers, our accumulated fund of 718,660. And we put in our excess income from our income and expenditure of 69,660. Okay, so we're going to add up our fixed assets. Now, it's important you add up the cost and depreciation. Then we're going to add our investments onto those. All right, we'll add up our current assets and your current liabilities, and then we're going to take those away from each other to find our working capital. Then we're going to add that answer onto our total fixed assets. That gives you the value of your club as 904,770. And hopefully when we add up our finance by, it adds up to 904,770, and it does, and that's known as capital employed. So there you go. That's it done. I'm just going to stop recording this and I'll take any questions then.